What's up, everybody? Welcome back. I know it's been a while. I've been very busy between work and trading, and of course, trading with the long term. But of course, we are back looking at the portfolio. As you can see, we're just about 43, up 6,700. For the month, we did actually fairly well on dividends. For this month, 186 in dividends. But actually, looking at my portfolio, I do track my portfolio once a month. I'll basically do all the readjustments through track my dividend, and this is basically my current portfolio that I've created that is a dividend yield of 7%. And of course, our yield on cost is actually 7.5%. So we're doing really well. And my goal, of course, is to get this to basically the 7.25 was my goal for next year. So I'm pretty much on track with a 7% dividend. Of course, we have experienced some pretty good overall growth in terms of capital gains. We have roughly about 6,100 in capital gains, and a lot of that has already been basically locked in stocks that I had recently talked about, like my Wells Fargo play. I had previously, I think it was in my previous video, I had talked about how I was putting in 10,000 into play Wells Fargo, JetBlue, and ExxonMobil. And those stocks have been moving really well. Haven't had all the capital that I've wanted to add to JetBlue just yet. I am waiting to see if we do get a little bit of a pullback. I did buy some in my other account. With the news of the vaccine delay from yesterday, I did buy a put for December 18th, but that's a short-term play. My long-term play is that I believe, with the vaccine news, that we could see, of course, JetBlue come back to a mid $20 stock, and that's basically why I've been long that one. Wells Fargo, as you can see, really popping out, almost hit $30 today. ExxonMobil, as you can see, really reaching for the 40s, is really following. Excuse me. As you can see, ExxonMobil has really been following basically the levels. I've basically been charting and playing the levels, and that's basically what I've been doing. I have been adding more and more to the stock. Oh, what I did want to talk about was, like I said, as you can see, currently my current yield, and this was updated. I updated this at the end of the month, so I put in another 650 into the account today, and so I'll do another part. I'm hoping by the end of the month that will take this to about 245. I think I said I was 245 in my last video, but when I actually put it all together, as you can see, this is basically my monthly dividend return. So every month, on average, this account currently, as of the end of the month, as of the end of November, yields $218 in dividends every single month, right? This is a 7% portfolio. My goal is to try to get it to about 10%, right? So that's basically what the purpose of the Wells Fargo play. The Wells Fargo play will eventually, over the next few years, take this from about a 7.5%, which is my goal for next year, to hopefully about 10%. Because I believe the Wells Fargo yield, currently it only pays 10%. But if you've actually looked at the history of Wells Fargo, whenever the stock has been beaten down, to one, you get a lot of capital appreciation. I do believe that the stock will come back to being a mid $50 stock, which is excuse me, which is why I'm buying it. As you can see, for the most part, on the low end, it was about a mid 40s, but basically at the end of coming into 2020, the stock was already in the mid 50s, right? And it was paying 50, was it 50? It was 51 cents dividend. It was paying a 51-cent dividend. Of course, they cut their dividend, which they did in the past. They did it in the 90s. They did it also again during the financial crash of 2008, 9. And the stock, of course, rebounded. And of course, as it rebounded, its dividend went up by leaps and bounds. And that's basically what I'm counting on for the next couple of years, is that both Wells Fargo and ExxonMobil, of course, will be paying and of course appreciating. That's basically that play that I'm looking for right now. In terms of my JetBlue, my goal for JetBlue, anywhere in the mid 20s, I would probably sell all of it. I have a couple of hundred shares between my Webull account and of course my M1. I will be adding more to it, as well as Dave & Buster's. I do believe eventually Dave and Buster's will get back. I know there was this talk of of it not being worth 25, and we see a nice little breakout to the upside today. We're up above 27, and I will be adding more to it. As you can see, it is basically stair stepping up, right? It retests the levels, and then of course, basically trades higher. And this is what I like to see, where stocks basically make highs, retest supports, and then trade higher, and that lets me know I'm going in the right direction, and then I can start adding to them. The same thing with, I spoke of Chewy, I believe it was Chewy last time. As you can see, Chewy on the breakout, it broke $70 on volume. You can see that right there. Chewy probably in anticipation of earnings. We had a little bit of a pullback to the downside, and as you can see, for the past 2 days, Chewy basically has held the $70. So I did add money to it. I think I added 150 to it on the breakout, and they added another 75, I believe, today on the pullback. And of course, stock traded higher, up $1.45 on the day. I do believe Chewy will basically keep on moving to the upside from what I can see from the chart. As you can see, you can basically see the levels where it was trading in a channel, and we finally broke out of the channel, and we broke out of the channel on volume, and we'll have to wait and see if those earnings numbers come out. If they come out good, you never know how the market is going to react. The market could pull back strategically to basically sucker people who are along the stock, or it could trade higher and then basically gap up. I'm going to have to wait and see. That's basically going to come out next week. I think it's Friday. Is the 5th Friday? Oh, it comes out on Saturday. Okay, so I'll hear what the earnings were over the weekend, and that's basically what I've been adding. Basically, what I've been adding to the portfolio. I did add both a Neo, and of course I added Neo as well as Switchback because of the news. You know, the shakeout news that of course things like Neo and the China stocks were being threatened about being delisted. If you've actually been paying attention to Neo and you've been following, as you can see Neo basically has been trading, literally came right down to the previous support that was right here. It previously had a support of about $38. Yesterday it came down to 30 and immediately slingshot up. I bought some into the Webull account, and then I bought a little bit more. I bought a little bit more yesterday, and I was able to sell out some. I was able to sell out a little bit. Same thing with Switchback. Switchback came down basically to the moving average, bounced off of the moving average, and then now it's testing that $34. It's testing $34. So of course the chart is going to start to reveal a little bit more information about where support and resistances are. Currently you can see the resistance here is at about $34, and we've made a support off of basically the moving average. Not really something I play all too much, but as you can see, it is something to pay attention to. So I basically added both of these to the portfolio, as basically these are my 2 new risks. I do have to of course put more money into Dave & Buster's as well as to JetBlue. I did end up selling out of CCL, and I basically dumped whatever I had into CCL, and I just put it all into Norwegian, and I will be adding more into Norwegian. A lot of these stocks are very long-term plays. Just about everything in the portfolio, for the most part, pays a dividend, whether it's one of my financials. As you can see, added about 4,300 into gain, and that's basically, these are my 2 monthly paying stocks. And then I basically take the money that I earn from a lot of these dividend stocks that have really high yields, but what they don't have is they don't have good growth in terms of their yield. So they currently pay, I think gain and main are about 8 or 9% in terms of their dividend yield. Let me see, I can take a look at it over here. Let's go yield. So basically the biggest ones, as you can see, 10.6 in gain, ladder is 11%, but what they don't have is they don't have actually good growth in terms of dividend growth. It's probably like maybe 2% or something. And so basically I take all of the dividends that I earn and I basically put them into dividends that are going to be growing. So basically how I do that is I look at my portfolio over here in Seeking Alpha, right? So I can go over to dividends and then I go over the growth, right? And so I want to know basically which stocks are going to have the biggest growth, moving forward, right? So as you can see, over the past 10 years, basically JP Morgan has been growing their dividend by 16%. Pru has been basically by 13%, IRM by 12%, and you can see the years, how long they've been doing that, and you can see, of course, how much it gives. So that's actually a pretty good percent. To get an additional 16% is a little over 45 cents. Whereas if you look down here and you look at gain, as you can see, gain is 3%, right? So you're just kind of barely beating inflation. With Maine probably not beating inflation. As you can see, some of these are companies, Ladder hasn't, because they cut their dividend. So even though it's still a high percentage, but because recently they cut their dividend. And so basically what I do is I take the money that I earn from my dividends from those plays, and then I roll them into stocks like JP Morgan, Prudential, IRM. I have a little bit in Simon Properties, and I put a little bit more into things like Apple, because I know, and of course the most important thing is paying attention to the whole dividend, right? I mean, if you look at Apple for the price only pays, what is it, 80 cents a year. So when it grows by 10 cents, you're only getting 8 cents on the year. Not really a lot, but in terms of, you're getting $3.50 from JP Morgan, you're getting $4.40 from things like Prudential. So that's really where I'm dumping my money, because I'm gonna see dividend growth, but I'm also gonna see capital gains. If you actually look at companies like JP Morgan prior to the pandemic, again, JP Morgan playing the levels as well. So as you can see, prior to the pandemic, it was looking fairly good, looking like it's steadily moving to the upside. So not only am I going to get capital gains on the stock price going up, but then I'm also going to get big increases into the dividend. That's basically what I do, because there's really no point in, for example, dripping into things like gain. I rather just wait till gain has a really strong pullback, dump a whole bunch of money into it, so that every month I'm basically getting in a lot of cash flow. I take that cash flow and I put it into stocks that are gonna grow, both from a capital gains perspective as well as from dividends perspective. And that's basically, so for next year, my goal is basically to take this to 600 a month in terms of dividend cash flow, and then take that dividend cash flow and then use that to basically pay off a mortgage abroad. As basically, that is my goal. My goal is to move abroad, and then for next year, well, so for the end of next year, for 2022, utilize the cash flow from this portfolio basically to pay off the mortgage overseas, and then of course keep adding to the portfolio to basically hit 200k to 250k and by the end of 2022. But for 2021, the goal is a minimum of 100k with 600 a month in cash flow.